How sharks operate in trading. Let me tell you something that most traders never fully grasp. They've heard the term sharks tossed around in forums, YouTube videos, or books. But they don't really know what that means. They imagine some Wall Street guy in a suit pressing a red button that crashes markets, or a secret algorithm watching their every move. But sharks in trading? They're not mystical. They're not invisible. They're predictable. They're calculated. And they're swimming right next to you. Every single day. Let's start with a basic truth. Retail traders, people like you and me, we don't move the market. We follow it. We react to it. We chase it. But sharks? They create it. They lead. They manipulate. They move price, not to find value, but to create emotion, fear, greed, confusion, because that's the food they feed on. Ever wonder why your stop loss gets hit and then price moves exactly where you wanted? Or why, after days of consolidation, a violent spike takes you out in seconds? That's not random. That's not bad luck. That's the shark. And here's the part that hurts the most. You help them do it. Let me paint you a picture. You've been watching a clean level for days. A support zone that's been respected 3 times. Price bounces again. You enter. You place a tight stop right below the zone. Textbook, right? What happens next? Price wicks you out. Then rockets upward without you. You feel like you've been robbed. You have, but not in the way you think. Your entry was correct. Your idea was solid. But your predictability? That's what killed you. Sharks know where you'll place your stop. They expect you to chase breakouts. They count on your fear to force you out, and your greed to pull you back in. Because once you understand this, trading is no longer about indicators or patterns. It's about behavior, psychology, and sharks are the psychologists of the market. Here's how they do it. Step 1. Accumulation. Sharks quietly build positions when no one's watching. Low volume. Sideways chop. The boring phase. The phase where retail gets tired, impatient, or distracted. That's when the real positioning happens. They buy slowly, silently, strategically. They leave no footprints. Until it's time. Step 2. Trap. They engineer a move. A false breakout. A manipulation. They make it look obvious. Retail piles in. Late. Excited. Hopeful. That's when the shark strikes. They dump their early buys into the breakout buyers. And then, they reverse the market. Hard. Fast. Merciless. Retail gets wiped out. Stops get hunted. Dreams get crushed. All in the blink of an eye. Step 3. Distribution. Now that they've cleared the field, they ride the real move. With less resistance. With your liquidity. With your money. They distribute into strength. Or buy into weakness. And they do it again. And again. And again. Like clockwork. Now, let me tell you a story. A real one. There was a trader I knew, let's call him Ryan. Smart guy. Had the drive. Learned all the technicals. But he couldn't stop losing money. Not because his strategy was bad, but because he traded with the herd. He followed what was obvious. What was clear. And every time he entered, boom. Wick. Fake out. Flush. He started thinking the market was against him. He got angry. Paranoid. Then he quit. Not because he lacked talent, but because he never saw the shark. You see, the moment you realize this game is rigged against predictability is the moment you begin to see the game. The shark isn't your enemy. He's your teacher. He exposes your impatience, your greed, your lack of preparation. Because sharks don't trade price. They trade people. Let's go deeper. Sharks look for liquidity pockets. What does that mean? It means they don't just want to buy low and sell high. They want to buy where people are selling and sell where people are buying. So, where are people selling? Below support. Where are they buying? Above resistance. And that's where sharks live. They swim just below your logic, just outside your awareness, until they strike. Now here's the twist. Sharks aren't just institutions. They're not just funds. They can be any trader who thinks differently. Anyone who trades against the obvious, against the crowd, with patience, with trap-setting intention. Even you can become one. But first, you have to stop being bait. So, how do you defend yourself? Not with indicators, not with predictions, but with understanding, with detachment, with observation. Instead of asking, where should I buy? Ask, where would the shark want me to buy? Instead of thinking, this is a breakout, ask, who's trapped if this fails? Because trading isn't about being right. It's about being on the right side, at the right time, for the right reason. Let me ask you this. Why do you think price consolidates for so long before a big move? It's not because the market is resting. It's because sharks are waiting. They're loading. They're studying the herd's behavior. And when the time is right, they ignite the explosion. They create the move. Not to get a better price, but to exploit emotion. Let me give you an example from this week. A stock, let's call it XTR, was consolidating under resistance for 10 days. Retail was getting excited. Volume was building. Everyone was watching. Then it finally broke. Boom, gap up. High volume spike. FOMO kicked in. Reddit threads lit up. Traders piled in at the open, only to watch it fade and collapse 15% in the same session. What happened? Sharks. They created the narrative. They let retail do the heavy lifting. And when the climax hit, they pulled the plug. The lesson here: don't chase. Don't predict. Observe. Wait for the trap. Then wait for the trap to fail. That's your moment. That's when the shark is done feeding, and there's room for you to swim. Here's another harsh truth. You're being watched. Your behavior, your habits, your reactions. Sharks study you more than you study them. Because your stops, your fear, your FOMO, that's their edge. The edge isn't a secret indicator. It's understanding what the crowd will do and doing the opposite. So what do you do with this knowledge? You slow down. You think in traps. You trade as if you were the shark. You plan how others will get trapped. Then wait. Let them trigger it. Let them suffer. Then you strike. Not emotionally. Not aggressively. Just strategically. Like a predator. Calm. Precise. Cold. And most importantly, you stop taking things personally. A stop loss is not an attack on you. It's part of the trap, part of the process. You're not special, but you can become smart by observing, waiting, becoming aware. Because here's the reality. In this ocean of trading, you're either feeding or you're being fed on. It's brutal. It's unfair, but it's real. And once you accept it, once you train your eyes to see beyond the chart, you stop getting played. You start playing. The sharks aren't going anywhere. They'll keep hunting. They'll keep feasting on the weak, the impulsive, the loud. But you don't have to be their meal. You can swim beside them. Not to manipulate, but to understand, to adapt, to survive, and eventually, to win. Let me leave you with this. Trading isn't about predicting the market. It's about predicting people. And when you master that, You don't just trade charts. You trade human nature. And that